Hello traders, and welcome to Trading the Trend. I am Dennis, and this is my weekend report for week ending March 24th. And right now I am looking at the S&P 500 weekly chart, and you can see we got an ugly little red candle there. Well, it's not the biggest red candle I've ever seen, nothing like you've seen over here, but nonetheless we've kind of ended this little uptrend we've been in. And the question now, is this the start of a downtrend or just a needed pullback? Time will tell. As you can see, we have a long ways to go before we hit that 40-week moving average. And if we were to look at this on the daily, and you can see we're just above the 50-day moving average, and it's kind of moved sideways after the big sell-off on Tuesday. So we'll have to see if that 50 will give us support. If this was going to have a 50% retracement from where we began back here right after the election to this point, that 50% retracement would bring us down to this 2240 area. So that's quite a ways to go. Let's hope we don't have that much of a correction. Okay, other markets, well, if you look at the Dow, it's pretty much the same way, same type of candle formation. But something like the Nasdaq, or let's look at the Nasdaq. It really isn't that scary. Nasdaq 100. Very small red candle, nothing very scary there. And if you look at the strongest sector, which remains the semiconductors, just a little doji here. They almost were up for the week. So it just depends on what part of the market you're in right now. Not everything is rolling over. It's just a down week, and until we see something more significant, that's how I'm going to look at it. It's just a down week. Looking at commodities, we'll take a look at oil first. Another down week for oil. It tried to rally last week, but we didn't get any continuation, so oil is still in a bit of a pullback stage. But if you look at this, I mean, we've rallied and we've had these pullbacks. This pullback doesn't look any different than any of these pullbacks, so no reason to be panicking here. If you bought up here at the high, well, then you might be panicking. But if you're in the habit of buying pullbacks, this is just another, at this point, possibly a buyable pullback. How's our metals holding up? They've actually been holding up pretty well. We actually have had 2 positive weeks in a row for silver. Same way for gold. Gold's about to get back above that 40-week moving average. That would be important to see. My gold miners, they're not acting as well as the metals, which is a little troublesome. I would rather see them leading. And last thing to look at, I should have looked at this one earlier, is the energy sector right there. This is the oil service sector, and you can see it is just in this continuous tight trading pattern to the downside. So we looked like we might have broken out of it last week, but then we had another down week again. So this is just continuing until we can see a nice break from this pattern. And I wouldn't be jumping into the oil sector right now unless you're just in a habit of trying to catch a falling knife, because that's what we're at right now. Now let's look at some currencies. And we'll start with my strong week rankings, and we have the yen on top, and it's been on top 3 days in a row, and I included the last 3 days of my strong week rankings just for comparison. And it really hasn't changed much, and it's just kind of tightened up quite a bit is what we're seeing. A bit of a consolidation here the last few days. And now look at some currency pairs. We'll start with our Euro US dollar weekly chart, and you can see we're still inside this trading range that we've been inside for over 2 years now. We've had 4 up weeks in a row, but there's just no telling where this is going to go from here. I mean, It looks like we're hitting some overhead resistance. If it can bust through that 108 area, then it certainly does have room to run to the top of this trading range, but it's still a sideways moving market, just a large trading range of about 1,000 pips. Now looking at a few more currencies, we have the Aussie US dollar, and you can see it's inside its own trading range, and it's been finding some very strong resistance at this 77.50 area. It just cannot get above there, but it's kind of hard to know which way to play it, so I'm pretty much leaving this one alone for the moment. Other things to look at, you have your US dollar yen, and it's definitely been in a down move to the strong yen right now, but we're coming up on that 200-week moving average, so we'll have to see if that can hold. And the last one I want to look at, since we have the New Zealand dollar and the yen as our top strong week trade, let's see what's going on there. And you can see this is why it's the strongest for the moment, is we've had what, 8, or is this 9, yeah, 4, 5, 6, yeah, 8 weeks in a row, 8 down weeks in a row. It certainly would have been a nice trade if if this is one you deal in, where you have a double top here and then the big down candle, and that kind of started this. It got below that 200-week moving average. It even tested it, and then down it goes. This is not a pair I normally trade, so I wasn't really watching it, but that certainly was a good trade signal. And how far it goes, there's no telling. I mean, there's no real strong support right here. It could continue. Before I'd be jumping in on this, I might look at it on a shorter time period. Looking at it on like the 1 hour chart over here, you can see this thing during this downtrend. It's had a lot of touches of that 200-hour moving average. So look at it on the hourly chart, and maybe if price pulls back and touches that 200-hour moving average, it'll be a less risky entry. Right now, if this thing pulls back on you, you could be a couple hundred pips behind in a hurry, and it would not have broken its downtrend. So just be careful if you're chasing these moves. And that's pretty much what I got for this week. Hopefully everyone has a great weekend, and I will catch you later.